Hi friends, this is Courage from Trading with Tan. So in this video, I'm going to show you how to place your trades on boom and crash accurately. So before I get started, let me explain to you why are you losing money on boom and crash right now. So let's make a deal first. If I really explain the exact thing that is happening to you in boom and crash right now, we are going to do two things. Number one is you are going to like this video, and if you are not subscribed to this channel, you are going to subscribe to this channel, right? Now, here is what happens to boom and crash with most people. We know that these small tick candles give you 50 cents per standard lot size, right? But if you have a $20 account, what you would do in the first place is you are going to place a minimum lot size, which is, let's say, 0.20, right? And on a 0.20 lot size, these small candles are going to give you a very small profit. So you are trying to scalp like 5 candles here, and each candle is giving you a very small profit. So once you close the trade after like 5 candles, you are going to having like 80 cents, like $1 in your account, right? So the next time you try again, you are going to say, okay, now let me increase the lot size and let me place like 5 trades so that I can get $2 from each candle, right? And to do that, you need to place like 5 lot sizes, right? In boom and crash, you will see people placing 5 lots on one trade. Why? Because they just want to be in the market for a very small period of time, right? And the problem with that is, when you try to do that, right, you are going to be risking a lot in your account, and periods like this will come, right? Periods like this will come where where the market will just make one tick candle and a huge spike, and then it doesn't respect your stop loss and it goes straight to almost blowing up your account. And the reason why you are blowing your account at this point is because you are placing too big lot sizes, and also you are placing too many trades on a small account because you want to just scalp and take a few trades. So this was my problem for a very long time when I was trying to trade boom and crash, right? And I know that because of that, most people are going through. So if this is exactly what is going on in your account right now, you go in there, you place very huge trades on boom and crash, and then the huge spike comes and almost blows you out simply because your lot size is big. And what makes your lot size big is you want to scalp a very few candles and go out, right? If that is exactly what is happening to you, go ahead and like this video right now. And if you want, just comment below and say this is exactly what is happening to me, right? It also happens when you try to catch these huge spikes right here, because what will happen is sometimes you are going to place a very huge lot size at this point, right? You are going to place a very huge lot size at this point, thinking that a scalp is going to come, right? So you risk like 20% of your account, and then the trade goes like 1, 2, 3, 4 candles, and now you get out, right? You lose a lot of money, and you try again thinking that, okay, if the spike didn't come here up to this point, it might come again on this point right here, and it doesn't come. You exit again with another huge loss, When the spike finally come, it doesn't cover up all the losses that you have occurred here, and also you exit the market because you don't have the confidence that you can get 2 spikes in a row. So doing that is just it feels like a roller coaster. You are going to be up and down, and you are never going to make money. Chances are you are going to lose a lot of money. So now let me go ahead and show you how to trade boom and crash correctly, right? So to trade boom and crash correctly, what you want to do is go to a higher time frame. For example, the 15-minute time frame. So this is boom 1000. So if this is boom 1000, what I know is I'm always looking to buy boom 1000 or boom 500 or boom 300. Why? Because I know that the candles that goes up will go really fast, and I can catch huge spikes and make a lot of money here. But I don't sell in a bull market, right? And also I don't buy in a crash market. So I come to the boom and crash, and I'm only looking to buy at this point. So I will just implement any strategy that I implement with other synthetic indices or currencies. For example, I can trade trend line breakout here at this point, because the reason why I like trading boom and crash is because once you get a breakout with a huge candle like this, the next candle that is gonna come is most probably almost going to be a bull candle again. So there's no chances of, if you place your trade here, and even if you place your tight stop loss right there, you can make a huge risk to reward ratio, just because chances of the market reversing after the breakout is few, because this is a boom market. So most of the time this boom market is going to be rising up. So you can trade the trend line break strategy like this with a bull market. And the good thing is, once you catch a breakout and you get into a trade, you won't hurry to exit the market, because you know that this market is going to go for a little while. Because this is a boom market. So if the spike starts coming, you are going to be making money. So here at this point, you are just waiting for the market to come up here and break past. Once it breaks here, you buy and you hold up until the market goes all the way up. So this is the correct way of trading this market. All you need to do is go to a higher time frame, start looking for trend line breaks. You can even start looking for things like support and resistance, right? But the reason why I like trend line breaks is because it shows, right, it allows you to catch a bigger move. But you can see that if you go to the higher time frame of this market, it's just like any other market, right? And chances of you making money in this market are very big, because you are only looking for buying opportunities right here. And also, most people think that boom and crash doesn't respect your stop loss. The reason why you think that it doesn't respect your stop loss is because if you are on a 1 minute time frame, and if you place your sell order at this point right here, and if this spike comes, this spike will just take the price from here to here at one point, right? But let's say you were placing your trade right here at this, let's say you started scalping right there, right? So let's say this is your sell order, and let's say this is your, let's put this as your stop loss. Let me color this red. I just want to show you one thing before we end up this video. So let's say this is your entry, and then this is your stop loss right here, right? This is your stop loss. You are thinking that the market should respect this stop loss, but I want to show you how small this is on a 1 hour time frame. Look at these two lines, red and blue lines. It's a very small, very small. How would you get into the market at any point and place your stop loss this close, right? It's not possible, right? But if you go to a 1 minute time frame, it looks possible. Why? Because you think, because of these candles, you think that this is a bigger level because of these tick candles and spikes. So you need to understand that boom and crash does respect your stop loss, but you are placing your stop loss too close to your entry point, right? You should never do that. You should go to higher time frames and look for any type of trend line breaks, any type of market analysis that you would do on any other market, right? So this is the correct way of trading boom and crash, not the way of scalping the boom and crash. So thank you for watching this video. If you liked it, make sure to click that like button. If you haven't subscribed, subscribe to this channel and join our Telegram group. I will put the link in the description below.